Right, guys, we are slightly over time, so I do apologize, but we're going to move on to the Q&A session. Craig's going to manage that with all the three guest speakers.
Ladies and gentlemen, thank you. As we're acutely aware of the time, so if you do need to leave, thank you for joining us. The number that was shown earlier was actually my number. I was wondering why it looked so familiar. So I haven't been rude by looking at my phone, I was just checking out for questions. And none came through. So either we clarified ourselves, amen, brother, I see that hand, sister. Either we explain ourselves very well or you guys have no idea what's happening here. But either of those is good. So we're going to take questions from the floor and then I'll pose questions. So, gentlemen. Yeah.
Thank you very much, ladies and gentlemen. It was a very interesting evening, good talks, and we got a very broad perspective into everything. We talked about uncertain times, diversification, equities, hedge funds, bonds, but I didn't hear anything about cryptocurrency. And the reason I'm asking is that I know we talk about the hard currency, flat currency, rand and dollars and everything else, but crypto has become part of our investment nowadays, and it's a reality that we exist around us. Yeah. And we are still shy of talking about crypto and investing in crypto. So can you put some more light on what you all investment expert thinks about it?
Great. So I'll answer that from a financial planning perspective, and then I'll see who of the panel is brave enough to offer an opinion on crypto. So, I mean, our view is that crypto is a party we're happy to be late to. From what we've seen from a financial planning perspective, investor behavior over the years, I mean, equities are volatile. Crypto is incredibly volatile, significantly volatile. And we see the behaviors that come out of equity investing, and there's been years and years of study of that. We imagine it's going to be significantly worse in the crypto space. So we're happy to be late to that party because we first need to understand the asset class. It's got 10 years history. Equity's got 10 decades. So there's a lot more there. And then there's also the fact that for a long time it's been an unregulated asset. So, you know, it took us a while to get our license. Crypto can make us lose that license quite quickly. So we do have clients invested in crypto. What we do is we assist them from a risk management perspective and help them understand where in the balance sheet that asset can fit. But we're not going to advise them as to which cryptocurrency to invest in. We'd rather play the role of position sizing, excuse me, helping them understand the state impact of crypto and that. But it's an asset class that's incredibly difficult to advise on at the moment. I don't know if any of the panelists would like to add to that. Thank you.
I think the one thing I can add is that people are quite divided about it. And you know, you pointed out. So they either go it's worth nothing and it's all going to fall apart, or they think it's the only thing that I should invest in and I should put all my money in there, and especially younger people that grew up with the success of the market over the last 10 years. My personal view is that, like any other industry, it will become a part of the world economy, and it will end up being a part of the world economy where there will be certain economic value created and trapped and transactions made. That helps me think about it, because I'm trying to say, how big will it be? You know, like oil and gas is what, 4% of the world? 4%. Well, the whole oil and gas industry in the world is 4% of the world economy. I can't see the crypto industry getting to that size ever. So then I start thinking about what type of asset allocation you must have. So it's like almost, so what we've been doing, similarly, very happy to be somewhat late to the party, but what we're really interested in is understanding in wealth management how crypto and real market assets interact with each other. So we've invested in a project to digitize the rand. So we provide the liquidity behind ZARP. So it's a stable coin. It's not going to grow. It's going to be worth 1 rand always. But what's interesting to us about that is that we can see how people interact between different risky and non-risky assets on the blockchain, and how we can link the blockchain then to the real world, because or fiat currencies or other asset classes. Because that's when it gets really interesting, because when it comes to the wealth management journey, you need to help people protect their assets. You need to help them move them around, and it's currently one of the biggest problems for youngsters that have built up some value in their crypto is how to diversify away from it, because they don't actually have any assets off the blockchain, to be honest. So now linking the blockchain with that's a project I'm passionate about, and we can speak more about it afterwards.
Yes, I'm just interested in the risk that investors have. I mean, we've got these big high-tech firms in America, NVIDIA, Google, Meta, which occupy a big portion of fund management's portfolios. In the changing technological world, is there not a risk that those investments over time will lose value? And what do fund managers do to mitigate against that risk?
Okay, I'm going to ask the one fund manager to tackle that.
So a few weeks ago, I met with a different fund manager and showed him a list of companies, Uber, Flutter that does online gambling, and all of these different companies. And his comment was, but these are all tech names. And the reality is that the world we live in now, most companies are tech companies. And so you can't avoid the role that technology plays in each sector and its advancement. And when we think about, Mag 7, the really big names that you just mentioned, I mean, these are some of the most innovative companies in the world. And what they've been able to do is take their enormous profits and reinvest them in research and development. And so you end up with a company like Google that has, Google search, which a lot of people are maybe using a bit less of as they use more like ChatGPT and, AI chatbots. But Google has also invested a lot in autonomous vehicles. So they own a company called Waymo, robo-taxis. So on the west coast of the US, you can call a taxi, with no driver. And you get into the car, and it takes you to your destination. People do it, and it looks really cool. You should YouTube it, which is
100,000 trips a day already.
Exactly, and they're taking share from the likes of Uber that have, physical drivers in them. And so when we look at each of these different companies, we look at them individually and not just as a theme. A company like Tesla is overvalued if you think of what it does, and even the potential that people have said they can do with robots, it's not real. And so as fund managers, it's our job to make sure that what these companies say they can promise, they can invest in, is actually feasible. So we use our discernment with each of them, and they're not all created equal. And so in our hedge fund, what we do sometimes is we buy the ones that we really like, like a Google or a Meta, Facebook, that are investing in products that we believe will make it. And then we short companies like a Tesla that is making big promises and quite expensive when you look at their underlying products. And so that's how we think about it over time, and constantly reassessing the feasibility of these new R&D research and products that these guys are launching. But the point is you always have to keep up, because they're always investing in something new that disrupts so many other different industries. So everything is tech these days, and it makes my job at least still, something that's relevant in the world of AI, in understanding what all of these companies are doing.
Would you like to add to that, Isak?
Well, since you put me on the spot now.
No, you can say no.
No, I'll just make brilliant answer. Just make the point that ultimately a lot of these big technological developments, historically, there's a hype cycle. historically, when a new technology arrives, whether it's AI now or the steam engine 200 years ago, people get overexcited. And I think the challenge is, to find examples where the technology can be applied in the short term and can have a positive impact sort of in the near term already versus kind of the blue sky thinking where there's a huge amount of uncertainty. So yeah, I think part of the challenge is also not getting sucked into the hype, because obviously there is a lot of hype about artificial intelligence at the moment.
Right. Oh. So we're staying in that row.
I'm sorry. My question is most probably quite irrelevant because I'm not in this business. But it's just a question related to how the United States seem to isolate them from the rest of the world. And there are talks about moving away from a dollar-based global economy. Is that factored into future thinking around investments? Like I said, especially in the current climate with America isolating them more and more.
Okay, I think Isak, it's strategic kind of.
Okay. Yeah, I mean, so the interesting thing is, if you asked me a month ago, I mean, because this question comes up a lot, is the dollar going to fall apart? And I mean, there's like a 40-year history of scaremongering. There's like a cottage industry of scaremongering that one day the dollar is going to collapse and it's going to have catastrophic financial consequences. And the reality is that the dollar is a dominant currency for a reason, because it's extremely convenient. And the analogy is, we're all speaking English here tonight, but I think most of us possibly not first language speakers. And it's just very, very convenient to have a shared language. It doesn't mean that English is better than any other language, it's just the convenience of having a shared language. And the dollar is something similar in the world. It's just the convenience of having that one currency that everyone can use, obviously backed up by America's very strong military might, its very strong economy, its very deep and liquid markets. So that would have been my answer a month ago. Now you say, actually, what they're doing is they're kind of shooting themselves in the foot. And I think what you might see is that the sort of the tentative moves away from the dollar could accelerate. Now, what does that mean for your investments? Probably not that much, because this doesn't happen immediately. I think this is a time scale. Obviously, if you diversify it across regions, across currencies, I mean, a weaker dollar implies there's a stronger rand. So some of your South African assets will probably do better. If you invest offshore, I mean, you can very easily invest across a range of currencies, hard currencies internationally. So no, I don't think that is something that you want to think about from the point of view of making portfolio changes. It's more a question of, if you're running a business, a multinational business, you've got suppliers in Japan, you've got customers in Australia, your bank is in Hong Kong, which currency do I operate in? Traditionally, it's been very easy just to use dollars across the board. Maybe going forward with tariffs, with some of these other complications, you start switching around the currencies that you transact in, the currencies that you store your money in the bank account, etc.
Great. In the interest of time, we're going to take 2 more questions. Sorry, and then we'll call an end to proceedings. The speakers will stay behind afterwards, and we can interact on a one-on-one basis. So, Elsie, your question. Thank you.
Thank you, sir. I just want to know about the BRICS in the global economy. We talk about the BRICS, and where does that fit in our crisis, our South African crisis?
I think an interesting one, because Trump attacked South Africa about a month ago, and our BRICS partners were conspicuously silent. Yeah, none of them came to stand up for us. So it's a very interesting question. Thank you. Any of you would like to tackle it?
I mean, it's a very short answer. I mean, if we can really trade with these countries, it would be phenomenal. Because obviously India, China, especially, massive economies. But there's no, at this stage, BRICS is more of a club where people get together and talk. what would be fantastic is if we can actually trade with these countries. I mean, India has some of the highest trade barriers in the world. One of the things that Trump's moaned about. So even though we've got this historic connection with India, it's very difficult to actually do business with them. And so, yeah, it would be fantastic if there's closer alignment, specifically with India and China. Russia, perhaps not so much. And Brazil, we basically have a very similar economy as Brazil. So we're not going to trade, we're not going to swap iron ore with them or agricultural products because we're very, very similar. And I believe they're quite good at buying as well.
Zandi, you'd like to add to that? Or you're good? Okay, yeah, no, I mean, I grew up in Durban, so I know trading with the Indians has been rough. Yeah. Any last question? We'll take one more question and then I think we'll release you to your children and your pets. No more questions. So, ladies and gentlemen, on behalf of GM Investments, we'd like to thank you all very much for joining us this evening. We trust that we've added value to the time investment that you've made. And those of you who are clients, we thank you very much for choosing us. There are over 100,000 advisors out there, so we understand that and we appreciate that you've chosen GM Investments to be your partner. We'd just like to acknowledge our guests and for the time, so a little gift, Munaf described me as a runner earlier. So actually, more accurately, I'm a red wine drinker. But I run so that I can actually drink more. So, Munaf, thank you. Isak, you shared it. Sandy? Great. Thank you. Great. And nothing for me. Ladies and gentlemen, thank you very much.